Yeah, look, David, you and I met, a little while back now, and I really wanted to get you on sort of talking to you because really
Thank you for having
fascinated
me.
with your business. It's a bookkeeping business, but it's so much more than a bookkeeping business, certainly from our conversation. So maybe tell me a little bit about your background, where you've come from, and balance my books.
Yeah, well, I've got a fairly stereotypical accounting function background. I'm a CPA and I've never worked in public practice, so I've never time billed in my life, unlike other accountants. I've never done audit work. I've worked with auditors, but I sort of
Take it from an ex-lawyer. I don't miss timesheets either.
I was actually speaking to someone recently, and I said, I don't know how you do it. It's not in my DNA.
No.
And so I had a pretty typical, junior accountant, finance manager, financial controller roles, and then a CFO role in a Spanish multinational that had a subsidiary here. And I guess I had this diversity of working in smaller businesses, then into larger corporates, and I've always kind of felt a real affinity to small, medium enterprise. And with that finance team function, I've sort of applied that into every role that I've worked in since. And Balance My Books is really, I guess, the culmination of all that work history, and now applying that finance team mentality to small businesses that realistically can't afford a full finance team. Ironically, we were recently talking to a new client, and he said he referred to us as business doctors, which resonated a little because we take a far greater view than strictly bookkeeping. And I think even the Balance My Books brand is there are lots of books in a business. So
Yes.
it's not just financial, it could be marketing, it could be any number of books that someone needs balancing. And really, the concept is that we're here to help and facilitate businesses to grow and be along on a journey, really, for us.
Yeah, great. It's funny actually you use that term business doctors. Sometimes I feel like we're the business ER because often a lot of our clients are, they're in strife with the ATO. The ATO has come knocking, and sometimes we're the only thing between them and, oblivion for the business, and sometimes for the directors and their families and homes and all that sort of thing. So yeah, I quite like that analogy. So yeah, great. And David, I guess what would be really interesting is to sort of, we do a lot of work with accountants, with bookkeepers, and they're certainly a very good source of referral work for us because you guys are on the front line with ATO debt. And I'd be interested to see what you're seeing out in the marketplace, and particularly, I guess, from that ATO specific space.
I think what I'm seeing is probably over three-quarters of our clients having some form of debt, um, or not being easily able to meet their obligations when quarters come around. So sort of scrambling to meet their obligations. And I think obviously I've watched a couple of these other videos, and we've had conversations, and in conversations with other people in the industry, I think it's been a flow-on effect from COVID. Obviously, COVID was a big trigger, but probably what really happened is that the ATO let people get into reasonable amounts of debt before they would take measures or action that would stop that accumulation of debt. So what I'm finding now is that the ATO is being far less forgiving with the quantities, the duration of the debt. And I would say that's across the board. So not even just our clients, anyone I speak to at networking events, friends, family, if they've got small businesses, most of them have some form of tax debt at the moment.
Yeah, look, I think that's right. And certainly, we were dealing, because obviously we're dealing with the ATO every day, all day. And, certainly during COVID, and particularly if I roll back to sort of around March, April, May 2020, when we were in the throes of, well, we were in the beginnings, I guess, of COVID, but certainly the ATO took a policy approach then, which I understood what they did. And I think it at the time was probably the right thing. And that was they were worried about what was going to be the impact of COVID and the pandemic and allowing businesses to, I guess, essentially store cash. And so they were saying, look, keep your lodgements up to date, but at the same time, there's no need to make payments. And we even had clients that had existing debt prior to COVID that we were trying to put into payment plans, and the ATO was saying, no, we're happy to defer all of that. And we resisted a lot of that and actually got as many of our clients as we could into plans, because we knew that coming out the other side, there was going to be this mountain of debt. And we know that a $26 billion uncontested ATO debt, 2/3 of which was owing by small business or the SME space, is now a $53 billion tax debt. And that means and it's not just that there are double the businesses that have tax debt. It's not really that. I mean, that is part of the problem. There are a lot more, but the debt sizes are much bigger. Our average tax debt that we were dealing with prior to COVID was around that $400,000 mark. Now it's around the $1 million mark. And that's difficult for businesses that, if they haven't stored the cash, to actually then meet those payments out of cash flow.
Yeah, and obviously I didn't touch on it, but I have an exposure to construction, significant.
Mm-hmm.
I've worked in construction in one way or another, project-based construction businesses for the last 20 years. And I think I read somewhere that construction was close to 20 billion of the 56 billion, something like that. So yep. It's disproportionately reflected in the tax debts. And
yep.
I think it's only about 15% of industries construction, and we're at 20% of the tax debt. So it's disproportionately high, and at the same time, there's lots of insolvencies. So I certainly feel that tax debt in the space that I'm working in is super prevalent and prominent. So,
and what are the things you're seeing in, let's talk about the construction industry, because we do, sort of following on from what you said, yes, they are disproportionately represented, and through no fault of their own, these are really good businesses, but there's been a whole range of factors that we see and we get told about almost every day. But what you're seeing as the main things that are, I guess, affecting the construction industry now that it's making cash is the issue. If cash flow is tight, then ATO debt rises.
Yeah, I think part of it is something you can't get around in construction. So even the most generous of builder, if you're a subcontractor, trade services, you are going to have some form of retention, whether it's a cash retention or a bank guarantee. Either one of those will tie up capital. So if you're bank guarantee, you're most likely having some equity in your properties or properties that you may have being tied up to utilize as a guarantee against your execution of a contract. If it's a cash retention, you're literally having the builder hold your cash for where you get 5% back at completion, and then another 2.5% back at completion, and another 2.5% a year later after your defects liability period passes. And what I found is between those two, the inflation cost pressures that we're feeling in raw material, there's a real squeeze in labour. So labour in construction hasn't decreased. Salaries haven't increased the way they may have in other industry, but they certainly haven't decreased. The unemployment rate's not high in construction at all. And I think in some particular roles, it's probably minus, if that's a thing. And as a result, builders and anyone involved in construction is having to retain staff at a time when maybe they may have shrunk or reduced their team size, and it's just eating into profit. So you've got cash out in a retention, and at the same time, you're having to spend more at an OPEX level to keep your teams the way they are on the promise of work to come. So,
and it's interesting. Some people listening to this might say, "Well, 5% isn't a lot, but it's 5% of the total contract price." And when margins are very skinny, that 5% can represent a much higher percentage of profit, and then cash flow, and then obviously the ability to pay the ATO. And I guess one of the things too is that people often say to me, "Are the ATO targeting specific industries?" And the answer is, I always say, is no, they're not targeting specific industries. They're targeting everybody who has ATO debt. But what they may do is that they're dealing with industries slightly differently when you get into the negotiation with them around payment terms, removal of interest and penalties and that sort of thing, because they see some industries as more risky than others. Labour hire is a classic one, but certainly construction is another one. And so therefore, that makes it, I think, much more difficult for businesses to, and particularly their advisors, if they're trying to get, payment terms and get some sort of agreement for the ATO to sort of work with the business to allow them to come out the other side, that makes it much more difficult. And then I guess when you couple that with the ATO's enforcement activities, and we know that you're dealing with and we're dealing with, they're going through the roof at the moment with that, and they're going very hard but also very fast, and that's making it extremely difficult. And we get about sort of 25 to 30% of our work from the accounting industry, from bookkeepers and accountants who are dealing with this, and they're constantly saying to me, 6 months ago even, I would have been able to get this across the line, but right now the ATO are pushing back and I just can't get a lot of this through. Can you guys help? And we come in and we deal with it. But often they've been negotiating for some time and there's damage done along the way by the ATO's enforcement procedures.
Yeah, and I think we've spoken about it in the past, and certainly in my interactions, because we obviously deal with a lot of accountants. For us, compliance work is not our focus. So we would happily rather work with accountants and compliance specialists. Our focus is on driving profitability and helping businesses grow. The reality is, I think what's happening that makes it even more difficult is that no one really knows where the ATO is going to land on any particular plan that's getting put forward. So there's a little bit of inconsistency that even advisors like yourself, I'm sure you guys find it, you just don't know. There's no two situations that will arrive at the same outcome any one time. And as a result, I think everyone just feels like, I feel like there's a big sentiment that let the sleeping dog lie until he doesn't. And the proactivity, I think, is what's not there anymore, because the ATO are not, so far, haven't shown themselves to be very, very consistent. And I, to be fair, I actually understand it, because construction is a perfect example. Winning or losing a contract is binary, right? So when the ATO is asking what is the serviceability of a company to meet their obligation, we have had some huge insolvencies in the last 18 months in the construction space that no one would have saw coming, right? So to think that a partitioning business or a small builder that turns over $10 million is going to have a 99% accuracy on their serviceability modeling is pretty tough. So I could understand why the ATO has taken a fairly stern approach with getting payment plans over the line, but the pressure is there in construction, no doubt, across the board. And
it's funny, you made a comment earlier about letting the sleeping dog lie, and again, traditionally I think people were saying, if we haven't heard anything from the ATO, that's a good thing. That's no longer the case, and in fact I think a silence from the ATO is I read it as a bad thing, because it means something is going on in the background.
Yep.
And we see that almost every day, and certainly every week, where I'll get a call, and it might even be that their accountant or themselves or some other advisors even been talking to the ATO, but there's then suddenly out of the blue one of these things happens, and they go, we thought we're okay because the ATO weren't contacting us, and we were sort of sending stuff in and yada yada yada. We had one recently, and it was exactly that, whereby it was a construction company, and they had been affected by all the things that we've talked about, and you and I have talked about over time. The construction industry is a very tough industry. Margins are tight, labour, and plus they had a COVID debt that had hung over, and they were working their way through it. But with everything else, they hadn't achieved it. And then out of the blue, they got a letter from the ATO saying their debt had been reported to a credit reporting agency. And when we talk to the ATO about that, they say that is one of their first things that they do. And it's a very simple thing for them to do. They just push a button and it happens. Any debt over $100,000 is reportable, as you know. And that is to get businesses to engage. The problem with it was that the minute that hit the reporting agency, the alerts went out to all the people that were following this company. Their funder was looking to cancel their funding. All their suppliers said, you're now on COD. This is for a business that's already struggling to get back on its feet and is doing a great job, and the directors have been working really hard, but that was curtains for them. luckily, we were, their broker knew us, brought us in, and we were able to get the ATO to. What we were actually able to do is actually get the funder and the suppliers to keep supply, and we gave comfort letters around that to do that while we worked with the ATO for an exit strategy that allowed the debt to be put in a long-term payment plan, remove the listing. And one of the good things about the credit reporting from the ATO, unlike other credit reporting, it doesn't stay in the history. It goes out totally, and then the business was able to trade on. But these are things that, again, the business thought they were okay, and the ATO wasn't being very vocal, and then bang, this happens.
And I think you just never, I don't think you can say with any certainty when that will or won't happen, right? So
yeah.
I think that doesn't help things. At the same time, everyone who's a taxpayer has an obligation. And I think for the most part, like you've indicated, and I would agree, silence isn't golden in this space, because engagement tends to drive better outcomes. I'm sure you experience that far more than I do. And I know firsthand through some of my clients that even when they're on payment arrangements and another lodgement comes up and they can't afford that one, they speak very openly with the tax office, and they tack things on, move things around. And I think once you have a working relationship with them, you're far better than literally saying nothing and doing nothing.
Yeah, look, I think that's right. I think there's a couple of things there. One is 100%. I mean, the ATO, they want two things, and they tell us this repeatedly. They want engagement and they want compliance. I think there's a third one, which they don't sort of talk about as much, but it underlies everything, is you need to engage, and you need to engage quickly. The ATO will certainly look at your compliance, but you also need to engage properly. And this is where it gets a bit tricky. The ATO have legal practice statements. They're quite detailed of what you need to do in terms of what they can approve. And it's no more different than going to a bank and putting a finance application in for a home loan. If it doesn't have all the information they need and it doesn't tick all the right boxes, they cannot approve it. The bank cannot approve it. It's the same with this. If you don't put something to the ATO that's capable of being accepted and also has all the relevant information that they need to be able to tick all the boxes internally to say, yes, we're happy with the term, we're happy with the terms that they've put to us. The business has capacity to meet this. We're comfortable with the viability of the business. We're not putting the government revenue at risk. We will support this business and move forward. But if you miss one of those steps, as I often say, it's the Little Britain computer says no. It's what comes back. And often they won't tell you why. They just say it's not capable of acceptance.
And I mean, that's pretty much, it's engagement with professionals such as yourself, isn't it? And it's the same thing for us. So we find that when we come into a business, we are able to give business owners insights that they weren't able to either extract, didn't have the knowledge. And I understand that, because if you're a builder, you know how to read plans and take a undeveloped site and turn it into a house, right? Or a set of apartments. You don't know how to deal with the ATO, because, as you've just mentioned, there are so many nuances and boxes that need to be ticked that you should leave that to professionals. And our business is the same. So a lot of our business owners don't know how to read a balance sheet. So we make things functional in particular in this compliance space. We do something as simple as a weekly snapshot of what their GST liability is, because most small business owners, even up to 20 million in some cases, they sort of take a bank balance, receivables, payables, and that might be the extent of their balance sheet knowledge. We extend just a little bit so that when they're doing this very simple maths, they can add in their obligations to the ATO and when it's going to be due and how much it increases over time, so that they're sort of parking that money, even if it's just mentally doing the mental finances to say, it's happening soon. In under a month, I'm going to have X amount due to the ATO, and we're telling them that every week, because we would rather that our clients are meeting their obligations when they fall due.
Yeah, and they don't need us, which is where we want every business to be there. We've got $60 billion of debt that we need to work through, but once we finish that, I'm happy to hang up the shingle, as they say, and move on. And David, that's one of the things, which is why I was keen to talk to you, is, I was really struck by your business when we first spoke, and that is that, yes, in theory, well, I guess overtly it's a bookkeeping business, but you're far more than that, and you're more, for me anyway, at least. Yes, that's a given, but it's the business advisory piece that you do, and you provide to small businesses, and part of that is, at its simplest, is really good, timely, accurate reporting. And then built on top of that is all that strategic advice around things that are in the business that, businesses don't have the capacity or the, ability to have experts in all these different areas. But you're like I guess in many ways, you're sitting there as a business advisor with them in their business, even though you're not physically there, helping them through and improving profitability, viability, all the things that we know are really important.
Yeah, and some of it just is that they, like you said, they don't have that knowledge, but it can be as simple as they didn't understand their break-even point, right? Or their hourly rates. So let's say you're in trade services and you charge out your resource at $130 an hour, and you pay them $50 an hour. You think you're making $80 an hour, okay? But if you haven't factored in the cost of the vehicle, the downtime, superannuation, payroll tax if it's applicable, the applicable workers' comp rate, that rate can very quickly go from 45 to 85, 90. And we run weekly reporting for a lot of our clients where we are assessing their labor productivity per hour so that every week they can see what their utilization is and their margin on their manpower every single week.
Yeah, wow.
Because for us, timeliness, so if we can be 99% accurate every week, I'll take that over 100% accurate at the end of the month where the month has already gone.
Yeah.
So
and often the damage is done, if there is damage.
Can't come back. It's over. Whereas if we're telling our clients that they've got 2 weeks in a row where they haven't really billed enough and they've spent all this labor and their hourly rates are all over the place, they may look at the work they've got on their books. Some of them have a lot of work on their books, but they can't quite get around to it, or they're not prioritizing the right project, or not getting ahead of it with the builder if they're a trade services client. So this may prompt them to take steps that will get a better outcome for them week on week, and that builds month on month, and month on month builds year on year.
Yeah, it's interesting, David. We've done a lot in the construction industry. We have seen so many clients where a really big contract, potentially profitable contract, has actually sent the business to us because they haven't had the capacity to be able to, either the contract wasn't as profitable as they thought, or they just didn't have the capital to actually deliver on the project, and then it went pear-shaped, and then they suddenly said, well, look, where can we find some money? So the ATO didn't get paid, and then they've worked their way through the contract, and at the end of it, they've got a $600,000 or $700,000 ATO bill, and thinking, now how do we deal with this?
Yeah, and a lot of that is because the reality is in those situations, the margin actually wasn't there to begin with, I think, is what tends to happen. In construction in particular, and in particular if you're a builder, every week where you're not getting the right amount of revenue, which is productivity, your overheads, your fixed labor cost or your fixed preliminary costs, they're accruing. So every week you go over, and most construction projects tend to have a little bit of giving their programs, you're losing money on what your estimated margin was. So if originally you went in pretty tight, by the time you're done and everything is said and done, the margin wasn't what you actually expected it to be. And I think if everyone in the industry priced it at the appropriate rates, the cost to build would be unsustainable. So I think you have some pressure from developers down, pressures from subcontractors up. So if you're a builder, you can, and which is like what we saw, the likes of PBS and ProBuild, really big builders, they were taking on jobs that were a little bit too tight, and you only need one or two things and that domino falls, and everyone's going to feel it down the line. So it's a very precarious time, construction.
Yeah, look, it is. And David, I just wanted to finally, there was one point you made earlier that I wanted to pick up on. It sort of came out of that conversation we have around the fact that, no news is not necessarily good news when it comes to the ATO. And also that ability to be able to predict when something is going to happen. One of the four nasties that the ATO generally tend to do, and around the timing of that. And partially that's been exacerbated, and we're seeing this a lot now by the fact that a lot of those functions are automated by the ATO. They have a system, they're highly data driven, they're highly tech driven, and a lot of the things such as we're talking about with the credit reporting and director penalty notices and so forth, a lot of that is now being driven automatically by the system, and the system checks in, does it meet the criteria? It factors in a whole bunch of things behind in terms of compliance that we talked about. But at the end of the day, then the computer literally issues the legal recovery. And that is something that is very difficult to predict for us when we're dealing with human beings at the ATO. But what we have found is all of that is, again, 100% avoidable through early engagement and proper engagement.
Yeah, I actually heard from an advisor recently that it was at a certain tipping point that there's a lot more manual intervention. I don't know if that's been your experience. It seems logical because I think I've seen that the larger the debts, it tends to be less automated, right? I don't know if you're finding that, but I've certainly seen instances.
I think that's a fair comment.
Yeah.
And then the next layer above that is with debts that are, I guess it makes sense, debts that are either considered very large or at risk, then the ATO will actually have a dedicated case officer who's just dealing with that from start to finish. And we find we've got a mix of all three, and they all have their sort of benefits from a client perspective. If you're with a case officer, then things are very serious, but at the same time we're getting consistency, and we can actually sort of build an agreed exit strategy with the one person we're dealing with within the ATO.
So do you find that they get better results?
Well, look, I think we're getting good results across the board, but I think because of the nature of those matters that are case managed, in one sense we feel the better results because they are those ones that are closer to the tipping point where the ATO may step in and take some, the most drastic action, which is actually wind the business up. So, I think we get a real satisfaction because we know and we're a bit weird, we like the tough ones. Yes, the ATO are going hard. Yes, the ATO have said there's $60 billion. We need to get that number down. We can either collect it or we can wind businesses up, but either way, the number comes down. We also know the ATO are trying to change, I guess, community views around payment of tax because during COVID, people got out of a tax-paying state of mind. They're trying to, and so they're also, when they're doing this, they're not just speaking to the taxpayers that have tax debt, they're talking to the businesses that don't and saying, don't use us as a source of credit. And so, I think there's a lot of factors going on there. But at the end of the day, the ATO, they do want to work with businesses. It's not in the ATO's and certainly not in the government's interest to wind all these businesses up. And if there is a way, and it comes back to being able, if you can speak their language, give them what they need, then they will work with businesses and support them out the other side.
I agree, and I think the reality is that it's never been, in particular in construction, had a terrible track record for phoenixing activities, right? And I think it's getting harder and harder to the point where between either the actual ASIC implications now, which are quite onerous, there's some design, so the design building practitioner obligations now, so your licensing requirements have changed it, and they'll continue to get difficult, I think. So being able to just wind up a building company and start up the next day, I think is going to be harder and harder. So as a result, it means you can't just get out of that tax debt by letting the ATO wind it up and starting afresh, right? So I think even businesses who are looking to exit in that way have to take a very, very, very cautious approach. It's far more purchasing of businesses and goodwill from liquidators. It can't even look like it can't smell, sound, or look like a Phoenix activity because it was far too prevalent, and it's almost we just don't see it much anymore.
No, and it's interesting because that term Phoenix, has got a bad rep because I certainly know I remember talking to the head of the Phoenix section. This was a number of years ago, and I said, "Look, my view is there's a legal Phoenix and there's an illegal Phoenix." And he went 100%. And I said, "What's the difference?" And he said, "No more complicated than value." And so the ATO recognised that some businesses just can't get out from under the pile, and they have to go through that process. And they also realise that people do need to make a living, and so if they want to come out the other side and still do the same thing, and they're fine with that as well. But it's that piece in the middle, and as long as when they are, if they are purchasing assets and they're purchasing contracts and whatever it might be and bringing them across, if they're done for value, then the ATO is fine with that. Where it gets a bit tricky is people get a bit clever and say, "Oh, well, what do we mean by value?" And they're putting too low a value, and there's a point with the ATO, say we call BS on that, and that's when ASIC gets involved, the ATO gets involved, the director gets listed with the Phoenix section and they stay there, and all their activities moving forward under the auspices of the Phoenix section. So it's not a preferred thing to do, in my view, unless there's the Phoenix is never a preferred thing, but even liquidation is never a preferred thing unless there are no alternatives. And, we see about 95 to 97% of the clients we fix. There are some in that 3 to 5% that have to go down that route. And I think all the things you've said have really shown that whilst it was once an easier decision to say we're going to go down that route, people are recognising there are real costs and dangers of doing that with licensing and banks and all sorts of things, and particularly in the construction industry with building licensing and everything. If you get caught up in that, then your license is at risk. So I think in many ways that has cleaned up quite a lot because people know they just can't get away with it anymore.
And I think what it's done is it's left a lot of debt there that otherwise the ATO would probably, 15 years ago have had to just write off because it would have got a, snap liquidation or, the business would have folded and the ATO was definitely never going to recover. No one was ever going to recover. And I think in those sort of Phoenix type arrangements where people were genuinely looking to come out of it the next day, so to speak, none of the creditors were really affected because they wanted to keep trading. That's just not possible anymore because if you're a big supplier of any sort of material, you've got really heavy underwriting, like your underwriting for insurance is very, very onerous. They don't want to deal with people who've had any sort of black mark on their ASIC register searches. So it's just not as easy as it was. So I think what's happening is people know that's not an option. And really what's left is what we've covered off already, which is getting proactive, engaging professionals like yourself, like us, to make sure that, A, you stay out of trouble. So we're frontline,
yep.
Right? That's what we try and do. But when things are going a little awry and you need to take some corrective measures, that you engage professionals who can get the best outcome for you. That's what we're about.
So go to the doctor for preventative, and if you can't, end up in the ER.
You go to or the surgeon.
Yeah,
as long as we're not in the oncology ward.
Yeah, I think that's it. That's it. It's interesting too because one of the things that sort of comes out of what you just said is that, and it's you'd be well aware that small business restructuring has been a catch thing, and yes. It's been something that's been used to death, I think, in the last sort of 12 to 18 months. And one of the things that frustrates me about this is that people go into those and they're told, well, look, if you pay us 20 grand and you've got an $800,000 debt, we can pay the ATO 20 cents in the dollar. So, that's a good way to drop $800,000 or $640,000 in ATO debt. And that's usually the only thing that's left there. But what's not explained to them is all those other impacts, like impacts on their insurance covenants, their banking covenants, licensing covenants if they happen to be in particular industries. And there's all these things. And on top of that, now the ATO is pushing back on a lot of those and voting against them, particularly if there are directors' loans or intercompany loans. And we're picking up a lot of work now of failed, or not even failed, they didn't get to it. They lodged the application with the ATO and then the ATO's refused it. And the problem they have is they have to pass a declaration that they are insolvent. And so we're dealing with the ATO saying, yes, you should support this business when they know that there's a solvency declaration that's been made. So it makes it tricky. And I think the other thing too, David, you raised around the system being cleaned up. One of the other things around that is the director penalty regime has certainly had a big impact on that, because
Yes.
it's no longer safe to put a company under, because if you haven't kept your lodgements up to date, then that doesn't actually achieve that. And you've seen businesses with, that have been put through one of these processes, and then we get a phone call saying, my business was liquidated a year ago, and I've got this thing called a lockdown director penalty notice for $600,000. Nobody told me about this, and they're personally liable for this. So I think there's been a whole range of factors, which is a good thing. It's cleaning up, not just, and we're talking about the construction industry today, but it happens in many, many industries. So we're not picking on the construction industry, but there are, it's good. It's cleaning a lot of this up, combined with the ATO getting, I think, more proactive more quickly, because their aim is also to get things before the debts get out of control. I think it's a good thing for the economy and good for business, because business is not getting in too deep a hole.
Yeah, certainly. I see a range of clients as well. Obviously, I've got a deep-rooted history in construction, and I've got an affinity for people who work in the industry, because it's a tough industry, and I think for the most part you're leaving a mark on a landscape. So I think there's a lot of pride for people who work in construction. There's a lot of mum and dad contractors who are just giving it a go, and I think for a long time they did really well when things were it was very, very rosy there for a while. But it's gotten to the point now where you've got to be really sharp, and I think a lot of the contractors, builders and subcontractors, had it really easy for a long time, and they didn't have to watch their pennies the way they are having to now. And even tendering they could pick and choose jobs almost.
No.
It's scramble for every dollar.
Yeah.
For every dollar. Yeah.
David, I think it's been great. So look, thank you for making the time and having a chat, and look forward to continuing to work with you, and hopefully we can both do our parts, as you say, for you to keep people away from us. But if they do need us, then we're here to help.
Thank you very much. Thanks,
Cheers.
Michael. Thank you.